Hi, I'm Alex Anderson with American Pacific Mortgage, kicking off the debut of my new video series where I'm going to be answering some of the most common mortgage and housing related questions that I get from my customers. The question I'll be answering today is one I get all the time, especially in today's ruthless housing market, and that is, should I go with an FHA loan over a conventional loan? The answer can go either way, so we're going to cover what type of buyer would benefit most from going with an FHA loan, and conversely, who would be better off sticking with a standard conventional loan. So, first off, what is an FHA loan? It's a government subsidized mortgage loan meant to help low income Americans buy a new home, and that home must be owner occupied, meaning that the buyer lives there. So, it can't be an investment property or a second home. FHA loans are not given out by the government. They are insured by the Federal Housing Administration, so that lenders are then protected if the borrowers default on their mortgage payments. And thanks to that reduction in risk to the lender, they are then able to offer affordable loans to borrowers who otherwise may have struggled to qualify under a conventional program. FHA loans are usually touted as offering lower rates, a low minimum down payment, more lenient credit requirements, and less strict underwriting guidelines. And for the most part, that's all true, and it sounds like a good deal for just about anyone. But truthfully, FHA loans are usually only a good fit for borrowers with lower credit scores, like around 620 and below, or for borrowers with previous derogatory credit events like bankruptcy or foreclosure. Or if a borrower has too much monthly debt versus their income to qualify for a conventional loan, then they might be able to qualify through FHA. The reason FHA loans really only benefit people with credit or debt issues is that the lower rates are mostly offset by other costs that borrowers don't have to incur with conventional loans, like an upfront mortgage insurance premium of roughly 1.75% of the loan amount, along with monthly mortgage insurance for the entire life of the loan. The minimum down payment for FHA loans is at 3.5%, and that sounds pretty low, but we're no longer living in the days when you were expected to put down 20%. In fact, for a conventional loan, the minimum down payment requirement is lower than FHA at 3%. And as for interest rates, FHA's rates are usually a little bit lower than those for conventional loans, but again, that gets offset by those mortgage insurance costs. So, unless your credit score is lower than around 620, or you have a major derogatory credit event in your past, like a foreclosure or bankruptcy, or your debt to income ratio is too high to qualify for a conventional loan, then FHA is probably not the way to go. A conventional loan will cost you less, even if the rate is a little higher. I hope that's helpful. Thank you all so much for watching. Please reach out and message me with any questions that you have, and I will see you in the next video.